Welcome traders. In this video, I'm going to explain to you how to use the TT breakout line indicator on TradingView. This video is for the day trading version. There will be a second video for the swing trading version. There are 4 things I'm going to show you in this video and how to use this indicator. 1, how to top tick. 2, how to bottom tick. 3, how to find a bullish breakout. And 4, how to find a bearish breakout. When looking at this set of indicators, this green line, this represents a weekly high. And this is for the daily TT breakout line. The red line represents a weekly low. These will act as support and resistance lines. The yellow line is the indicator that I created. This indicator measures various values over different periods of time and calculates and forms this line as the trading day evolves. So, to start with, we're going to go over how to top tick. Top ticking is when you're wanting to short at the very top of a bullish run. You can see right here, we have this bullish run, and then it does pull it back. So if I was wanting to top tick Microsoft, what I look for is when it makes this bullish run, I look to see when this yellow line flattens out. For instance, you can see the first flatten out space right here. This is usually when I'll make my first entry. So if I made my first entry here, we'll say to short it at 226, it runs up more. And you can see that line is recalculating a little bit. And as it is making this slanted line like this going upward, you do not want to short when it's set up like this. You want to wait until it flattens out again. So as it flattens out right here on this candlestick, I make my second entry. This value is around 226.30. And this is a large cap, so you can see it kind of plays around right here. And as this line stays flattened out, that is what I'm looking for. And you can see how it loses its momentum and then drops. That is how you top tick using this line. This works for anything that you can trade on TradingView: large caps, penny stocks, forex, crypto, you name it. So, how to bottom tick. Let's go back here and find a different example. So if we're wanting to bottom tick, that means we're wanting to find the very bottom and then make a bullish trade right here. How I use this to bottom tick in a day trade. Same thing with the yellow line. You'll see the candlesticks pushing down hard. The yellow line is slanted and then it flattens out. So I would take my first long position here. It slants just a little more, and then it flattens out. I make my second entry somewhere right in here. And then you see that bounce. So from 212.85 up here to almost 214. And that is how you bottom tick with this indicator. What I like to do if I'm top ticking or bottom ticking. For instance, if I'm top ticking, I'll make my entries, and then I'll usually use that yellow line as a target price. Same thing with bottom ticking. Make my entries, and then I'll use that yellow line as a target price. Now, as the day goes on, and if we're not wanting to top tick or bottom tick, let's say we're wanting to look for a bullish breakout. When you see the candlesticks break above that yellow line. So here we are, starting on this day. These candlesticks are below it, and then they push up. What you want to look for is a candlestick to close above it. So it didn't happen here, but it happened in this next candlestick. That right there would give me a good idea that Microsoft on this date was probably going to be bullish. So I would make my entry, and let's say I made my entry in this next one, and you can see that long tail wick that came down right there. I'm okay with that, because you do have to give your trade a little bit of cushion here. So if I had a stop loss in, I would probably look back at one of the previous candles at its open and put that as my stop. So we see what this one does right here, and then the next few candles, it's just kind of hang around that yellow line. And then this one fully commits, and then it just takes off running. That's what we're looking for here. So in this example, if I made an entry right here, even if I decided to put a stop loss in right here, I might have gotten triggered at this point, just depends, but I'd watch it in the day trade, because this candlestick would have confirmed it once again. And I would have went long and then rode that momentum up. Let's say we want to look for a bearish breakout. So I'm going to use this line, and we're watching Microsoft or any ticker just on any random day. We see the candlesticks go down. It breaks through the yellow line. I let one candlestick close on the opposite side. I make my entry. And then just write it down to either the target price or whenever you start to see that buying pressure come in. So you could have made a quick day trade right here from about 210.50 and even letting it pull up to right here. We'll just round it down to 210. That's still a 50-cent move, and depending on whatever contracts you had, still could have been a decent amount of profit. And that's if you let profit go right here. Now, let's say we did not take our profits. Well, like I spoke a minute ago, I'm putting a stop loss in. I'd put a stop loss in at my previous candlestick. So I would have made entry right here. And then whatever the value is on this previous candlestick above that yellow line, that's where I put my stop loss in. So you can see it comes back up here, and it would have triggered. It went a little bit higher, and then it dropped again to commit for that bearish breakout once more before the market closed. So in general, if you are an experienced day trader, you understand how a choppy market can make your day trades like this. So this is how this indicator will help you out to find that direction, help you make the best decisions on if you're going to trade bullish or bearish, and when to take your profits and when to cut your losses.